Hi, everybody. This is Eddie. Going to do a market update for next week. So we've been having a really good week lately. We actually had a rally last week, and this week we had a consolidation week. It stayed in a range, and it got really tight in that range, right? So this looks very familiar from the last consolidation range right here. Last one lasted for 2 weeks. So far, this one only lasted for one. But if you look into the hourly chart, it's ready to break out pretty soon in either direction. So it can either break up or break down. So next week, I think the CPI coming out will have a big impact on which direction we will go. So we could have a couple of days of consolidation before CPI numbers come out, unless it was leaked beforehand, like before. Um, so there's two different scenarios here. If we do break out, I think we will probably just going to test the 200-day moving average first, right? We're going to break up. We want to test the 200-day moving average and then come back, retest this breakout area before we go any higher, right? So that's the likely scenario if we do break out. Now, if we break down, we can go quite bits down. I think if we do break down, potentially we could break the low and then make a new low and test the high of the pre-COVID level. So this is an area that I've been watching since we start breaking down in the first place. So this was a major support area. And if you look at the volume shelf right here, majority of the volume is around this area. So this is the buy zone, right? So if we do break this consolidation area and take out the low, right? There's not much from stopping it from going from that low to this high right here, this COVID high. So if we do break down, I think that's my target, and then that's the area where I will be buying some significant amount of leap options and probably get in half positions around here, and then I'll just wait till we continue an uptrend before I add the rest, right? So that's the game plan, anyways, for the longer term portfolio and for swing trading is to buy around this 3,400 area. All right. So we look at the Qs. Qs, we did break above this area on the Qs, but we're approaching this 330 resistance area, and this is the top of this channel. So this is like a megaphone channel where you started small and then it starts to expand bigger, right? So if you look at the expansion, if we do come down, look, it'll come down to exactly around this pre-COVID high to be at the bottom of the channel. So if that does happen, then most likely that's where it's going to go. If we get rejected, we're going to hit over here, and maybe continue higher from there, right? So next week is a very key area to watch, and I think the CPI is a catalyst for that. So watch it very carefully on the reaction. Don't look at the numbers because it could have different reaction based on numbers. I mean, things could be priced in, right? So and I know that people sometimes come out with good numbers and then it goes the other direction. So this is why I always concentrate on price action first. I don't really trade in news. I trade the price action. So this is a very good looking bull flag at the moment, but things can change really fast based on news. So hopefully we get our next leg up. If we do, then most likely we're gonna hit this, and then if we hit this area and then come back and hold this area, likely we're gonna get that trend change and into a bull cycle. So that is what I'm looking for next week. And I will be waiting. I do still have some swing trade positions on, and they all have stop losses in place, and I already locked in about a third of that in profit already. So even if it start coming down, I'll just get stopped out profit, right? So even though I'm in the trade, I'm not really risking that much money because a chart like this can really go in either direction. Right. One of the interesting things that I was looking at was the VIX. So the VIX, I'm gonna put this on weekly chart for easier to see. So the VIX, it's coming down to a major support area. So this is the support zone that we had for a little while around this $20. So this is last August. So last August, we did hit this exact same area and it consolidated here and then it broken out, right? So in the VIX, a spike in the VIX, meaning there was a big down move in the index, right? So it looks very similar to this type of move over here. So if it does hover around the 20 and then reverses back up, expect the next leg down, right? So if that happens, I mean, you could take a VIX trade for that spike as well, right? Or you can use it to hedge your portfolio if you don't want to sell anything. So that's something I'm looking at as well. So it looks like last year in August it was just hovering around here. So when it's moving around, not moving much, and just consolidate a while, usually the market is steadily going up with caution, right? It steady goes up, and then finally once it hits a certain peak, it then get the big reversal down. So last year it was around September, that we got that big huge spike in volatility, and then we got another spike in volatility at the end of October. Right. So that could happen as well. I mean, usually for the election, things don't start moving till about the end of October and early November. Right. So from now till then, there could be some chop around, right? Especially in September. September is usually a slow month for stocks. All right. So if you look back on the SPX, so we look back, this is the area we were looking at. So this was August. So in August, we had a rally up towards September, and then right when September come, we got this big down move, and then we have this big gap up, gap down right here that spiked the volatility index. It gapped down, it tested the 100-day moving average, and then we bounced back up, and then it formed like a wedge down into a support area, and then it bounced back up towards the end of the year, right? So this is it came down, and then once October came around, like mid-October, we found our support, made a higher low. We choke out the high of the wedge, and then we break out. So that's the type of pattern you want to look for, right? So if this year we're gonna have the exact same type of pattern, right? Just look for the higher low and then take out of the high of the consolidation range, right? That's your signal to go into the stock, and then you get a mega move like this, right? Towards the end of the year. So that's what I'm looking for this year as well. So like I said, we could come down, right? August. If we go up, we can test up here. So we would have a good August by hitting the 200-day moving average, and then come September we get that pullback, right? And then maybe pull back just to retest this breakout range, and then we get the rally up, right? So something to look at, something to consider. This is just I guess, right? So if things change, don't let an idea get in your head, right? Always follow the money, meaning go with the price action. Whatever it wants to do, just play the direction it's going to, right? Don't be stubborn and try to go against the direction just because you have a certain idea what the stock should be at, right? And I did that before, and you definitely do not want to make that mistake. All right, so let's go through some stocks. So there's a lot of stuff that's been moving, a lot of stuff that's being set up, right? And I was talking about last week how you want to follow the leaders to see what direction the markets is actually going. So one of the things I noticed is that every single stock, including the index itself, is a little bit overbought, right? That the RSI levels are all above 70. That doesn't mean it's going to come down either. That just means it's a sign of strength. And the only time a weakness start has happen is when it goes above 70 and then start coming down and trending down on the RSI. Because when the stocks are strong, they can be at 70 and just keep trending around the top to make new highs, right? Like it did right here. Just keep trending around, make new highs, right? So it can happen over here as well. So Apple is probably strongest of the bunch on the recovery because it's gone straight up. We're back above the the area here, and it's very close to all-time highs already. So Apple has been the market leader in this entire bear market, right? And on the recovery, once the bear market is done, usually they're also the ones that lead out the market as well. So keep an eye on Apple. If Apple start making new highs, likely this bear market is over, and that other stocks will start catching up to Apple as well. So keep a close eye on that. Go find my list. So I have a list of leading groups, meaning different sectors, and then the biggest stocks in those type of sectors, what moves that sector, right? So I go through this list just to see what's actually working, what's not working, which sectors hot and what sectors aren't. So this will tell you like what you should be flowing your money into, right? So I look at this as well. This is value versus growth. So this is value. Value is below this consolidation top. That means it's underperforming the index. Value stocks are actually underperforming the index on the recovery back up, right? So this is growth. Growth went above that peak and we're above it already, right? That means growth is where money is flowing into, right? Not value. So people that are already investing in value during the down market, because during the down market, the value stocks were outperforming the growth. So now you see the money rotating from the growth back into, rotating from the value back into the growth. And that's why the growth is outperforming the value substantially right now, right? So, and that's a good sign. So that means all our favorite stocks are moving, right? So we made a higher high based off this low right here, but that doesn't really mean anything because the overall trend is still down. It really needs to take out the 200-day moving average to really consider to be out of the bear market. So that is the goal. So if you want, you can set an alert right here. And then once it goes above it, then you'll be ready with some money and buy the dips, right? The only time you want to buy the dips are when we're in the uptrend. Okay, you never want to buy the dip in the downtrend. Okay, it goes down further, right? So you always want to buy dips in uptrend. So that's what we're waiting for. We're looking for a trend change and then make a higher low and then do higher high, higher lows. And then every single time it makes a higher low, we go in, we make some money, right? That's how you trade the stock market, right? All right, so that's growth. ARK. So ARK, I was talking about ARK a week or two ago about this base. So we're breaking out of this base right now. So you can see we're at the 100-day moving average right here, and we're starting to break out. So if we break out of this 52 area, we're going to test this 200-day moving average around that 70. That's a pretty significant move. Pretty significant move, sorry, from here to the 200-day moving average, right? So if you want to make a trade, you can definitely do that trade from here to there and keep a stop loss if it goes below and below the moving averages right here, right? So that's a fairly good risk reward trade, right? And I would give it some time because it will take time for this stock to really, this index to really move out of this, right? So if markets aren't doing well, it's most likely consolidate over here, and then it will move back up once the market is ready. So go through. So this is Drive. Drive is like autonomous driving. So your Google, NVIDIA, and mostly Tesla. So it's actually performing just like the market is right at the resistance, right? It's above the 100 and it's getting stacked. So everything looks good. But we're still below 200-day moving average, so kind of waiting for that as well. But there's certain things that you can start looking into for positions, right? This is cybersecurity. This is one of my favorite indexes to consider for the longer term, and it is still in a base, and this one of the moving average is the big resistance right here, right? Once we break that, there's a 200, and then coming up to here. Right. So if we do move above this area, most likely it's going to go from 50 to 55 and then from 55 to 60. So, everything start looking good because we're coming out and everything's going back above the zero line on the indicators. So that's a good sign. That means momentum is starting to pick up and that money is starting to flow a little bit. And you can see volumes been picking up on these big dips here as well. Every single time it makes a dip, there's somebody's buying them up. So, that's a good sign to look at. All right. IHI, same thing. We're at the resistance area right here. And I'm going to add my alert here. Once that breaks out, you want to get a trade from here to here. Target will be like up in 62 area. And this is medical devices, so you kind of need the economy to recover before they're going to start spending on new medical equipment as well. So this is a lot based on how the economy is doing. And if the markets are good, you can see that this actually has really good performance over time during a bull market. So that's what we're looking for. Once we go back into a bull market, this is one of the indexes that I really like to get into. Same with SMH. SMH has that exact same level right over here. Once you break above this consolidation range, I think it's going to bring the 200-day down. Once it breaks above that, right, it's going to go. And this is the leading sector for your tech stocks, right? You want the semiconductors to outperform, right? When you see semiconductor index starting to outperform the other index, you know that the tech stocks are working, right? Because if tech, everything requires a chip now. So if the chip industry is moving with high momentum, that means a lot of orders are coming through, and that means this tech in the sector is growing quite rapidly, right? So you want to see this to start outperform the index. That way you can start investing into more tech names at that time. Let's take a look at some of the more value stuff. So this is the financials, and you can see that it's actually not performing well because everybody's at this high already, and they're still just halfway through it, right? That means there's not a lot of money flowing into it. You can see the volumes actually dropping. It's not increasing; it's dropping, right? Industrials are moving. Industrials are exact same place as the index. So that's fairly good if industrials are working. And then once we break above the 200-day moving average, then most likely it's going to go back up and test the highs right there. So this is technology sector. And you see technology sector completely outperforms everybody else because we already broke through this resistance and we're approaching the 200-day already. So that's what why I am looking at more tech names than anything else. Is once tech names start to move and that momentum start coming in, you could get some big moves in technology. You can make a lot of money really fast, right? That's why I like to trade the sector a lot. And I tend to scout like screen for tech stocks mostly for trades because they're the best bang for the buck over time, right? Because they move the biggest. So if you're good with your technicals and your stop losses, right, you can catch the move really, really fast. You can make the most amount of money in the shortest amount of time, right? As long as you take your risk management seriously and get out once the momentum is done, you should be able to lock in some substantial gains with technology sector. So all the tech names that were performing in 2020, it's probably going to be the same names that are going to perform once we're out of this bear market as well. So keep an eye on those, make a list. And then once they start breaking out of that, you really want to start getting into some of those things. And I find that lately there's a lot of high growth names that are breaking out of bases. And those are also the stocks that are the worst performing of last year. So they're more risky, but once risk trades are starting to perform, then you could see that in the stocks that are in that AKK ETF, ARKK ETF, right? If that stuff's starting to perform, you can suspect that the other stuff will start performing as well because that's high risk money start coming into the markets with a bullish sentiment. So let's take a look at AMD. So AMD, we talked about buying AMD down here at this space right here at and then it's now at over $100, right? So we hit our last target, which is around this range right here, about that 100 to 110 range. So we hit over 100, and I still have a half precision left in this. I did take profits when we were approaching this 100-day resistance right here, so I did take some profits. And now we're heading to this 110 zone. So once we hit that 110 zone, I most likely take another half of what's remaining, and it'll just keep the rest for longer term. I bought 2024 leap options, and I did a synthetic long on it. So I used some puts to fund my calls, and then as it start moving up, yeah, I should be able to make pretty substantial gains off. Amazon. So Amazon gapped and go. So that's a really good sign. That's a sign of strength. We are heading to resistance zone. So there might be a little pullback. So if it does pull back, you want to see it hold this gap range. If it holds this gap range, start buying some, right? If you can hold here, most likely it's going to break out this 200, and then we're coming back up to this high range right here. This range been here for a long time. It was consolidating here for over a year. So, maybe now that we split the stock, you'll get more interest, and then we finally be able to push out of this range and make new highs. You see, I talked about Meta before. It's a stock that's not going to move because their business is being challenged with Apple blocking their ads. So like I said, if other people start blocking ads on their phones, allow users to block ads on their phones, then Meta is going to have a really hard time growing, right? The only hope for Meta is that their the metaverse works out. If their metaverse works out, this could be like one of the cheapest stocks that you can buy. But that will take time, and it's not how I invest. I invest in momentum. There's no momentum here, so just skip that till we finally start moving. Google. So Google is in a very big base right here. I am looking for Google to break out this base, and I hoping it'll break out this base very quickly, because once it start moving, it's gonna go back to highs really fast. So I do have a leap option on Google, just a small one. So I'm only in it one quarter position. I am looking to add once you break out this range right here, and then I'm looking to take some profits around this range right here, and then I'll add back once we start breaking out of this range and starting new uptrend. Then I'll start adding and just holding for the longer term, because Google is one of the best stocks you can buy. They're the best in class, and there's really nothing that can really replace it in the future. So. Same with Microsoft, very nice base, broken out the base, broken out 100-day moving average, consolidating above it. All the moving averages were stacked down here when I bought it, and then we popped. And right now, I'm looking for is a break of 200, break 200, hit this high right here, and then the new all-time highs shortly after that. And Microsoft is one of the stocks you could buy and hold if you really wanted to, but I am mostly trading off the momentum. So once I see this base right here, I knew that it was trying to break out. So, and then we did. Netflix, also a stock I skip. They don't make money, so it's not investable for me. NVIDIA is at a major resistance as well, just like the market. So you really want to see this to break. They do have earnings coming up, so maybe that would be the catalyst to get them out of this bottom and form a new uptrend, right? So I am looking to afford for the earnings. AMD had earnings, and it went down on earnings, but it went back up shortly after. So if they do come down on earnings, that might be your opportunity to buy the dip on NVIDIA, right? So if you want to play the earnings, you can actually go in small, you wanted to, and then you add after earnings if you want to. That way you won't miss the trade. You also won't be fully invested. So if it does come down after earnings, you can actually average back into it, right? As long as you plan the trade ahead of time, you can average back into a trade. It's not averaging down. Make sure you don't average down, but you can always average into a trade. Tesla had a big down day at the 200. So 200 was the resistance that I was talking about. I was saying that 900 is going to be a pretty heavy resistance. So it did break 900, went to 950 to test this area right here. So that was part of the plan, and that was also the target for taking profits. So if you didn't take the profits and you got caught in this, then it was expected, right? So the next resistance about this 800 level right here. It really needs to hold that area in order for it to sustain this uptrend and continue higher, right? We're in an overall downtrend, but like it's starting to change and maybe get into an uptrend once we break above this 1000 range, right? And they did announce a stock split, so maybe that will create some more interest and get the momentum it needs to break out. All right, let's get into some names that I'm looking for breakouts. So SHOP. SHOP is a name that I'm looking at for a very long base right here. And then, if it breaks out this base right here, it got some room to go. So set my alert right here. I do have precision in it. So if we do break this, we're coming up to $80 range, right? That's a double, right? If it breaks out, you're gonna get a double. If you go in with some leap options or in the money calls for the next few months and it works out, you can make 200 or 300% gains on that, on those options, right? If you just buying the stock, then you could double your money with just the stock as well. So this is one of the names that once it moves, it'll move very, very fast. So if you can see, it moves quite quickly, right? This is a fairly good base right here. All you're looking for is a break of that base. It is in a squeeze as well, and it looks like it's starting to launch on the squeeze. So this is a trade that you can be, and there's a lot of these charts out there, a lot of these. In my Discord group, I must have posted over 30 different trades that has exact same type of pattern that are about to break out, and some already did break out. And if these teams all start breaking out at the same time, there's going to be a lot of money to be made in the short trade from here to the first range that is going to consolidate in, right? Once we break out here, it's going to consolidate around right here before going higher, right? One of my biggest winners in the last couple of weeks is INMD. So INMD, we bought it around this area and then it broken out, right? And I think I posted this around 33, right? So after earnings, I think. And then we broken out and keep going. And as you can see, I set my alert here to take more profits already. I took half off already, so we do have some room to move over here. I do have a stop loss being set below this consolidation right here, so around 33. So you'll lock me in for profit no matter what happens from here on. So hopefully we get to see it work out and hit 42, and then hopefully you'll have a little dip around there, and then I'll buy the dip to go higher, because once this stock moves, it moves a lot. It can go all the way back up to the highs, right? Yeah, that's $100. That's about 200 some percent. So there's a lot of these names out there that are just set up for it. And if you want to catch some of these names, join our Discord group, right? You could join it. Our courses actually includes 1 year of the Discord as well. So I like to teach as we trade, because there's just so many different things with trading, and you can't really teach it all in one course, because whenever the market reacts differently, right, we have to change our strategies, and then based on the price action, and then we trade off that, right? So last year in 2020 we made like killer money. Like I was doing 200 or 300% a month in my smaller accounts, my smaller trading accounts, because everything was working out, everything was breaking out, right? We were making a ton of money, and then once the market start churning, right, it was in a range a little bit, so we start doing credit spreads, and even though we weren't hitting those big, huge months anymore, we're still making like 30 to 70% a month doing credit spreads, right? And then once that stopped working, we start coming down really hard with the bear market. That's when we started day trading. That's where we start printing money on a daily basis as well. So there's markets go through different stages, and really, if you want to do this for a living, or you want to take trading seriously, you got to really learn how to trade different market uh, conditions and have different styles of trading for those environments, right? So I change based on what I'm seeing in the markets. And like right now, we're the volatility is still high. We're still day trading, but we're seeing these opportunities here. We're starting to get back into swing trading again because a lot of these stocks, especially these growth names, has substantial gains and now gave it all back those gains and finally start moving again, right? So if you could catch the next cycle up, most likely won't be as high as this. I'm thinking about probably halfway through right here or so, right? But that's still a substantial gain for where we're trading at right now, right? So you just go with the flow, right? If it start in here and you take profits, you start continue to keep going, just go back in, right, and trade some more, right? That's how you really have to adjust to the markets, and then let the market tell you what to do. Don't try to be stubborn and just because you think it's going to hit here and then it doesn't, you just stay in the market. That's how you end up bag holding a lot of names for a long time and let your losses compound, right? You really don't want that because time is money. When in the markets, the faster you get out of bad trades, the faster you can make money in trades that are working, right? So those are the tips for this week. I hope to see you guys later. Hope to see you guys in my Discord. You can find my website in description below. Make sure you like, subscribe to the video so you'll help with the algorithms. Thanks. I'll see you guys next time.